Paul. Good morning, everyone.
Buckle up. The Bank of Canada is preparing for a bumpy ride.
A lot has happened since our March decision 5 weeks ago.
As the White House continues to drive global market turmoil, the Donald Trump trade war is causing Canada's central bank to pump the brakes on interest rate cuts, halting a streak of 7 straight reductions.
The path for U.S. trade policy remains highly unpredictable.
And that unpredictability has the Bank of Canada holding its benchmark interest rate at 2.75%. But even now, we're already seeing Canada's economy take a hit as tariffs and uncertainty pull down consumer confidence and weaken business spending in the first quarter.
How do you predict the future when you have no idea in the chaos of a trade war?
Bank of Canada Governor Tiff Macklem is highlighting 2 scenarios that could play out. One possibility is that most of the tariffs are negotiated away and don't cause long-term harm to the overall economy. But the second possibility is much more dire. It would see the Canadian economy suffer severe consequences from a long-lasting global trade war.
The dramatic protectionist shift in U.S. trade policy and the chaotic delivery have increased uncertainty, roiled financial markets, diminished global growth prospects, and increased inflation expectations.
The Bank of Canada says it is committed to keeping inflation under control, even in the chaos, but all the economic uncertainty has consumers caught in the middle.
It certainly means that if you're renewing a mortgage, if you're trying to get a car loan or something like that, that's not going to become cheaper. If you've got a variable rate mortgage, it's not going to become cheaper.
The next interest rate announcement from the Bank of Canada is on June 4th, more than 5 weeks after the federal election, meaning whichever party wins, they'll have more than a month to tackle Trump's tariffs before the central bank's next decision. Scott Hurst, CTV News, Toronto.